All right, so I was going through my my watch list this morning, and I've got the index watch list here. I'm looking at the chart on the left side here, say the price with the volume and color coding and a moving average, two moving averages, also the squeeze indicator here. And on the right side, you have relative strength with the 10 and 40 simple moving averages. This is the price in a line chart with the 10 and 40, and then sales. So an ETF is not going to show sales and revenue growth and earnings growth. So what I'm keying in on here is, right, so this is relative strength, and where did it cross down through the 10? Right here. Since then, I know in December, the market was super hot, and a lot of the small micro caps that I was trading, I was crushing it. Everything kind of worked. You know, you put, you're trading on a 2 minute chart, 1 minute, whatever time frame, doesn't matter. You know, you're trading on something, and let's say this is a micro cap with a high ADR. Pretend it's not IWM for a second, and let's say you're going to put your buy order here at the new highs, and it triggers, and boom, all that, and you know, put you take profit here. It's like breaking out and hitting that, or going in the halt, and then coming out of halt and going higher, and higher and higher and higher, and all that worked out great. So if you know, since then, since we've kind of crossed down through here, and in January, you've had MCI. Actually, I think this next chart really explains it better. Equal weighted, NASDAQ equal weighted, right? So this was crossed down through December 29th. So NVIDIA and SMCI really accounted for a lot of these gains that we've seen. But most everything else has been going down to sideways. So, you know, now we're starting to cross up again. So, well, but look at where we are in relation. Look at this divergence here. So the 40 is well above the 10 on the relative strength side of things. Will that mean anything? I don't know. You never know for sure at the market. But here's T2 107% of stocks above the 200-day price moving average, and you've got this long sideways squeeze. So you had a nice run up. So this is something I'd want to key in on here and keep an eye on. If it breaks above here, you know, maybe we get another leg higher and the rest of the stuff's going to start moving too. Or you can break down, you know, you can just basically draw a box, break down through this line here. If you look at a weekly chart, you could probably even use it off the weekly. So there you go. But you can see it is showing some weakness here. So you have to be careful with these things. You can never buy into any one thing too much that you get overconfident or overly emotional. You know, we're playing probabilities here, but we're trying to put together a picture, paint a picture. If you look at the equal weighted index, S&P 500, here it broke down through on January 5th, and it's just been straight down on the relative strength side of things. So I think the key point of this video is, like, you know, if you're going to trade in long, like, you want to be trading, like, this is the meat. You want to be, maybe you can be more aggressive on the long side. If you're taking longs in here, it just depends on what you're trading, like Bitcoin, right? So if we look at here, last 5 days, last biggest gainers, Bitcoin. The Bitcoin stocks have been moving, and look at the relative strength. So anyway, just painting a picture and looking at, you know, what's moving, what's not moving, what could move, when to trade, those sorts of things. And I think right now it's probably better to be a little bit cautious as you have this going on here. So we'll see.